Live.
Happy Valentine's Day, YouTube. Welcome to the market recap. It's good to have you here. Let's go ahead and read our legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators of features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So let's go ahead and I want to say welcome, everybody. Thanks for coming today. Let me go ahead and bring our guests on today. And I'm just getting you kind of situated on our screen, Darryl. How are you doing today?
Awesome. It's great to be here, and thank you for the opportunity. And if you can't tell from my accent, I'm in Australia. I'm in Sydney, Australia, and strangely enough, it's 8:30 on Saturday morning here, but it's still Valentine's Day over there, so I hope everybody had a great Valentine's Day today.
Did you do anything, well, here's a good question. Did you do anything special for Valentine's Day yesterday?
Do you know what my wife says? I treat her special every day.
Well, that's important. That's good to hear.
Not really, no.
Oh, all right, okay.
Yeah, the flowers help, cards help, having a coffee at a special place. Yeah.
Cool.
So we had a lovely day. Thank you. Thank you.
I was going to try and make you uncomfortable by wishing you happy Valentine's Day and seeing how you reacted. But since it's no longer Valentine's Day, we can skip it. So so you do quite a bit. Let's talk a little bit about Australia. You do quite a bit of training with people on how to trade in Australia?
Yes, Jeff. I started this I was going to say semi-retirement. For my sins, I've been a corporate lawyer for most of my life and for 30 years with a bank called the Commonwealth Bank of Australia. And I was approached to teach technical analysis, and that was back in 2003, and that's really what I've been doing since. I'm a member and director on the board of the Australian Technical Analysts Association, and we have chapter meetings all around Australia. So to me, this is my love. I'm a frustrated teacher. I'm glad not to be a lawyer. Well, I still am a lawyer. I still got a certificate, but I don't practice law. And but I just love the teaching, and I love especially what I'm doing at the moment is rolling out a program just aimed at those people who are struggling with trading. Some people, are doing well, but many are not. And I've always had an interest in the psychology of trading. And I used to think to myself, why is it that so many people do struggle? And of course, I'm like everybody else. I have my moments. And so my program now is all about probability and what that means in trading in terms of probability. And so it's a little bit more mathematically based rather than human behaviour based. And I'm enjoying it. People say, when are you going to retire? And I said, why would I retire? I'm just loving what I'm doing. So, and being around traders, I just really respect traders. Are so disciplined, are so determined. And, you just really want to help people to the extent that you can.
Awesome. And you use quite a bit of, I guess, Ichimoku in kind of what you're doing.
Yes, I came across it only in 2013. That's 7 years ago. And as soon as I saw it, Jeff, I guess to me, I always want to keep it simple. And so for me, Ichimoku gives me a hierarchy of support and resistance in a visual place. And so Ichimoku really means equilibrium at a glance. And so the good news is that we can see really, straight away whether the market's bullish, bearish, or consolidating on various levels. And to be able to do that just straight away without any analysis is great. So a lot of people use it as a filter. I also trade using Ichimoku, and if we've got time, I'm quite happy to show how I do that. But yeah, I like Ichimoku, yes.
All right. Well, I notice you've got some charts ready to show to us.
Yes.
Do you have a particular order you want to talk about them? I'm very interested to see what you have to say about the American markets.
Yes, I thought I'd sort of focus really on the American market. And I mean, you're the leader, really. We don't always follow you in Australia, but we're certainly influenced. So let's have a look perhaps at the S&P. And I'll just maximise this. So that's what the market looks like this afternoon, your time. And so, how would I analyse this or talk about it? And of course, the S&P and the Dow, etc., all around the world are reacting to the reserve banks, the central banks, having ultra low interest rates, and governments around the world, the Western world in particular, are wanting to stimulate the economy. So to me, this is what the market is doing is really reflecting what those two bodies really want. I know there's a lot of talk about, are we at a high? Is it going to go down? And I've got absolutely no idea. I quite like what Mark Douglas said, and that is every moment in the market is unique.
That's true. And the market would have to stop going up to start going down, I think, too.
Exactly. And so to me, I don't try and predict what the market's going to do. And so with Ichimoku, it's more about forecasting. And so that's what I really like about it. So that's the daily chart. And if I just put Ichimoku on there, there we go. Now, I know when people first see this, they think, oh, my goodness, what is this? This is a bunch of spaghetti or something. But all I want to say at a high level is where is the price in relation to this, what we call a cloud? So that orange piece you can see there between two indicators, excuse me. If the price is above the cloud, it's bullish. If it's below the cloud, it's bearish. And if it's in the cloud, it's consolidating. So if I just go back a bit, it's a long time since the market, you could say, was bearish. But here is a period here back in October, November, December of 2018, where you can see that the price was below the cloud. So that was that was bearish. And so if this market, for me, if somebody says, well, Darryl, when do you think this market is going? I don't know when, but I believe the market is talking to me. And I can assure you, Jeff, I don't hear voices, but what I do believe is that the market is saying something to me. So does it come up on your screen with the cloud? There's this yellow bit, the bottom of this cloud. Can you see that easily?
Yes, we can see that.
So that's a very strong period there. That's to me, this is a level of support, and that is 50% of the range over the last 52 periods, and that's a very, very strong period, a piece or price point, I should say, of support. So if this market on a daily chart pierces that, then subject to a filter that I apply, I may be saying, look, it's over. But having said that, look here, in this period, I've just got to move my webcam on my screen. So this was September, October of last year. You can see where the market popped its head below that point. And of course, as we all know, there's no certainty in the market. I talk about probability. So the good news is that if I went short here as a trader, I have a filter, and I'll just say the filter now. See this blue line? This is what's called the Chicago. That's the closing price at present plotted 26 periods back. So if we just look at the current price today, in Friday, you can see where this Chicago indicator is. So here, back in October, if we go back 26 periods, you can see that the Chicago, or this blue line, is not below the cloud. And so that was a filter that I always apply. I will not take a trade. So this is talking about trading now. I won't take the trade unless that Chicago span, this 26 period back of the closing price, is in what I call free space. But anyway, so there hasn't been below, the price hasn't been below the cloud for some time.
Can I restate that real quickly? I just want to make sure I understand it. So the first thing that you're going to look at for kind of a directional change, or maybe a trend change, is you're going to look for the price to go down below the Kumo or the cloud, right?
Yes.
The additional filter that you'll be looking for is the current value of the blue line, which you called the Chicago. I've always called it the Chiku. So I learned how to say it correctly today. But the Chicago, also you want that to also be below the cloud as well.
Correct.
Okay. So and that's the additional filter you're talking about.
Yes.
Okay. And it looks like if we would have looked back to that October area that you're talking about before, that probably would have hit both of those, the October 18, the previous year, when it did enter that bearish phase. That does look like it's a filter that would have actually allowed you to go short right there, if I'm listening correctly.
Yes. Okay. No, you're quite right. And there are two parts to the cloud. One that I've been focusing on, the one that's usually more flat rather than the other one. This is the Senekau Span B. Now, I don't like, when I say I don't like talking about the Japanese names, only because that just sort of confuses people. So I call that the 52 period, which that's what it is. So you can see that this is the one that, to me, is the strongest level of support and resistance. The one at the top is basically, that's called Senekau Span A. That is 50% of the range for basically roughly the last 18 periods. Mm-hmm. So the 52 is obviously, from a hierarchy point of view, stronger. So you're quite right. When the market came down initially, you can see what happened though. And this could have been, I don't call them losing trades, Jeff, I call them donations. So this was probably a donation, this one, because the Chicago, I think, I'm not just sure if the 26 goes back to that period. I think it does. It has to, yeah. So the Chicago actually did come down underneath the cloud, and that would have given me an indication to go in if I'm doing the breakout and not the pullback. You can see that it broke down below this cloud, but then isn't it interesting what happened? Perhaps I can make it a bit clearer. You notice it came down the cloud, but isn't it amazing? It did pull back and it really hit that 52 period again, and that formed a level of resistance, and then it went down. But you can see it was very, very volatile. I mean, that was really hard to trade, isn't it? So what one would do is you'd go to a lower time frame. So it just depends on what people's trading plans are. And I always teach, Jeff, we must have a written trading plan. For many, I ask people in the room, your hands up those who've got a written trading plan, and you're very lucky to get quite a few people hands up. Most people have their written trading plan in their head, which is fine. But so it's okay, because with that written trading plan, you'd have a stop loss. I always have a stop loss. But you're really whipsawed through this period, and that happens. Yeah, there's no certainty, but that's fine, because if we've just got a really sensible written trading plan with a sensible stop loss, that's fine, not a problem.
Can we talk about how you set up a stop loss? I think that I always find it interesting where people look to place their stop losses, and I always think it's funny when people set their stop losses where they can afford to lose as opposed to what the chart is telling you. But do you have a general rule of thumb for what you're looking for when you place a stop loss?
Well, there's various methods. I mean, you can look at an average true range as a method. For me, and yeah, we evolve, don't we? We sort of one year we'll do one thing, another year we'll do something different. So this year, 2020, using Ichimoku, I can use Ichimoku with a stop loss. So, and I suppose I'm talking now about a trailing stop rather than the initial stop. So if we just go to, for example, how I would have traded just the market just recently. So how would I have got into this market, and where would I have put my initial stop and a trailing stop? So again, I'm waiting for the price to come out of the cloud, and that's here about the 7th of October last year. But again, the Chicago was in the cloud, so I'm not going to take it. So as the price came up here, you can see that the Chicago still is in price. I won't take the trade. So you can say I'm giving up profit, but that doesn't worry me. I want to have all the ducks in a row as far as I can. So as soon as the Chicago came out of price, that's where I would have got in. Now, your question is, where would I have put my stop loss? So I would have put my initial stop, excuse me, depending on my way I'm trading my account on a daily chart. If I put my stop loss here on the top of the cloud, to me that's a logical place to put it, because that is a point of support. And so if it goes past that point of support, then I don't want to be in the trade. But the only problem with that's all right in theory, Jeff, but if I'm entering the market here and I'm looking at a stop loss down here, the problem is the risk-reward ratio. See, I prefer a risk-reward ratio of risk is 1, reward is 3. So let me see where my potential reward might have been. So I'm going back to July of 2019, and here's a point of resistance. Earlier on, there's this point of resistance. So I'm a little bit worried about whether taking that trade, it's interesting, on the basis of where I put my stop. Now, if I put my stop where you see the green line, that would be more sensible in this situation. So what is this line? This line is the Tennyson, I think it's called. This is 50% of the range of the last 9 periods. So I could put my stop here on that green line, and that is a nice risk-reward ratio then. So that, to answer your question, that where the green line is, that's where my stop would be initially. As the market moves up, I would be using the purple line. That is the 50% of the range for the last 26 periods. And you'll notice that as the market moved up and it hit that, then that would have stopped me out of that trade. Now, some people say, oh, but look what happened. You've given up more profit. But I don't know about you up there in America, Karen, but down here, we don't get next week's data, this week. So I wouldn't have known that the market was going to go up like that. It could have come down.
We charge extra for next week's data.
Do you take Amex?
Sure.
No, I'll give you the card later, Jeff. But do you know the good news is this? The good news is this. Isn't it good we don't know next week's data today? Because you know what? If we did, we wouldn't have a market. So my philosophy is if the markets were certain, we wouldn't have a market. And yet that's the very thing we crave as traders, certainty. It's part of our DNA. And that's one of the challenges, I think, for traders is to cope with uncertainty.
Definitely.
But I
Definitely.
teach where can we find the certainty in the uncertainty. It's a bit of a paradox, but I think we can. So to answer your question, Jeff, initial stop, I probably could have used that green line, or I could have used an ATR, 2 times ATR, whatever. So everybody's got their different places of stop, but that's an easy one to see visually.
Okay, good. Let's kind of sum up the way we see the SB. Looking at it with the Ichimoku right now, we're bullish, and we're bullish until it's going to go below the Kumo. Is that a safe way to kind of sum up what we see in the S&P?
Yes. Can I go to an hourly chart?
I will allow it.
You will allow it? You're very kind to me. Here we go. Here we go. Now, what have we got here? So it's still bullish, isn't it? So still above the cloud. Let me just go down a little bit lower. Let me go to the 5 minute. I was looking at this earlier. Isn't it interesting what we've got here? Wow, how do you trade that, you might say? It's you get a different perspective. So for me, I probably would be looking at a lower time frame from now on to get an idea of the market moving in a different direction. But looking at this 5 minute chart, it's clear that this is not giving me any indication, I think, that this market wants to turn down at any stage going into the future. So, yes, that's the S&P, Jeff. Would you like to go to the Dow?
Sure. Yeah, absolutely.
So again, let's have a look at where the Ichimoku is in regard to that. Can I just say one thing, because I get very excited about Ichimoku. Often you see, and of course, straight away you can see that it's bullish. There's not a problem with that. If we go down a lower time frame, if we go to a 5 minute chart, does that give us any heads up? Not really. You can see again, even on a 5 minute chart. Let's have a look at that. Let's have a look. Can we see something we could have done on a 5 minute chart? And the answer is yes, we could. So this is on a 5 minute chart. Some people say this is scalping, but this is one of the nice things about Zenith, of course, is that you've got the live data, but importantly, you've got the future cloud. And I'll talk quickly about that in a moment. But so when this price came down, and the market and the Chicago is in free space, that was an opportunity to go short. So that's sort of a bit of a counter to what we're talking about in the daily. But that would be, I think, depending upon where you've got your stop, you may have been stopped out. But anyway, that just gives you a bit of a heads up as to a 5 minute chart. But on the daily chart, certainly this is still going gangbusters. And as I said, that's really what that's what the central banks want. Let's not forget that. They want us to be investing in the stock market and in real estate, etc. The only thing that's interesting, see the Chicago, it's starting to come across here to price. So when I see this blue line, the Chicago, in coming towards price or the cloud, often the price will consolidate. So if, just depending upon what happens next week, we could go into a period of consolidation on the Dow. You can see the very strong level of support here at what, 28,000, 400. That's a very strong level of support here. Of course, if that market appears as that can be a point to go short. But of course, it could be very short term. See, I think if the market does turn down, I think in the States, I think I just read this morning that there's a proposal to reduce taxes to encourage the average person with a 401k to go into the stock market. So I can see the authorities really wanting to keep this momentum going as far as they can. I'll be honest. I'm a bear at the moment, and of course I'm getting really caught out by being a bear, but that's fine. I close out my bearish positions because it just is unusual times. But anyway, we're getting into fundamentals now.
Yeah.
So
well,
Jeff,
it's also an election year, and I think I was reading a study that talked about how seasonally, or at least on election years, they do everything they. Well, I mean, the big market, the makers of the market. Well, they want to have like a very, very stable upward movement this year up through the election, and so I think that'll kind of maybe peter out after the election. But I'm not seeing anything that makes me want to be too bearish. Personally.
Oh, look, I agree. I mean, here's the NASDAQ. I mean, I've got to listen to the market. Often my intuition ends up being indigestion. And so I've really got to look at not what I think the market or what I'd like it to do, but the market is very clear. It's shouting, actually. It's saying, people are still prepared to support this market. There's no doubt about that. Until they don't.
Until they're not, yeah. Until Monday, right?
As long as we keep laughing, I think that's the most important thing. I've got one here of Netflix. I don't know if you want to see Netflix. That was an interesting chart because I wonder if I can see it. It was an example of gapping. You know how the market likes to fill gaps. I'm trying to see where that gap was. Oh, it's back a bit. Perhaps if I go to a weekly chart.
Out of pure curiosity, Darryl, are you a subscriber to Netflix?
Yes.
Okay.
And Disney.
And Disney
I'm a
Plus.
tragic. Yeah. But my therapist is really working on me hard, but for my sins, I love American politics. Now, we won't go into politics, but I'm always watching American TV. It's more exciting than our politics, to be honest.
Oh, it's been more interesting the last several years.
It's great. I just love it, but I'm a bit of a tragic with it. I've got to stop it. But therapy doesn't work, you see, because oh dear. I thought there was a gap there that I used to talk about, because often, if there is a gap, the market often likes to fill the gap. I just can't see it on that chart. I apologise. Anyway, if we just put good old Ichimoku on this, what have we got? Again, very, very clearly, very bullish on Netflix. If we go back a bit, does that help us at all? Oh, that's interesting. There's the gap. Isn't this is like the Mona Lisa when you look at Ichimoku, I reckon. So here was this very strong level of support here. This is the 52, the Senecal span B. And it just dropped straight down. And what is interesting for me is that's a big gap. And finally, the market took a while, but it actually filled the gap. And so that's something that I always like to look at. But I could not have taken this as a trade because it gapped down straight away. So there was not an opportunity to go short. But of course, using the parameters I use and the way I use Ichimoku, so the trades that I take are very few and far between. But I try to look at them as a high probability trade. So Netflix, it's still doing really nicely. Can I just say quickly about this future cloud, because I don't subscribe to the view that this is predicting or forecasting the future, because this future cloud, we call it, is really the present cloud. So what you see here, I'll just make it a bit clear. So really, where you see the end of the cloud, that is really reflecting where price is now. So it's it would have been here. I won't do it today, but you can with Zenith change the settings so you're not plotting forward 26 periods. So you actually see this future cloud being the present cloud back here at the present price. So what does that actually mean? In a way, it's the past cloud, ironically, because where price is, we can see that where the cloud was 26 periods prior to now. And that might give a clue as to what Ichimoku is about. Because what's this checkout? This is 26 periods back from present price. So in my own little way, I think, can I show you something on Ichimoku if we've got time? Very
of course. Okay. Of course. I'll allow it.
You're too kind to me. So what I've sort of said is about the filter is, if the price is above the cloud, then it's bullish, and if it's below the cloud, it's bearish, and in the cloud, it's neutral, and it provides this hierarchy of support. And so I've said how I trade it, and that is, when it goes through the cloud. But I just wanted to explain a little bit about these indicators. So you've got the 9, the 18, the 26, the 52. They're the four, and then you've got the closing price. But I want to just go down to here. It says, what other approaches are similar to Ichimoku? And this is why I think it's important, in my mind, to talk about these indicators as not moving averages, as not being midpoints, not being a range divided by 2, but 50% of a range. And the reason is this: with Fibonacci retracements, etc., even though people will argue that 50% is not a Fibonacci number, it is actually. It's like you go 0, 0, 1, 2, 3, 5, 8, 13, 21, etc. 1 and 2, that's 50%. Gann always talked about 50% of a range. Heikin-Ashi candles, the open price is actually 50% of the range of the previous period. And the Haguru method, and my good friend Gary Burton, he's got an EA in your metastock.
I coded that EA.
Did you really? Well done. Well done. Excellent, Jeff. And so that is 50% of the range of a series of candles. So isn't it interesting? Here you've got people at different time frames, typically not having a computer, including Ichimoku, coming up with this concept of 50% of a range. So all of the indicators in Ichimoku are reflective of support and resistance, not at a closing price or a high or a low, but 50% of a range. And that, to me, is the power of Ichimoku. It's a bit different to anything else, in my mind. I'm not saying it's any better. Like all indicators work until they don't, as we know. But this really resonates with me with Ichimoku, particularly because it reflects the other approaches.
Very well. Very good. Interesting.
I don't know if you want to look at one more.
Yeah.
You want to look at
Sure.
let's have a look at a forex. This is the euro against the US dollar. So this is clearly bearish at the moment. Beautiful. This is lovely. Let's come back in here. See, it's interesting. See, I was talking about the Chicago, when it goes into price or into the cloud, the price tends to consolidate, and it was really doing that. But here we can see that, about the 28th of January, 27th of January, the market came down below this level, this 52-point level, Seneca span B. Of course, it did here as well, but this is such a strong level of support that I wouldn't have gone into the market here. But you could go into the market here, and particularly with the Chicago in free space. Now, this is where where you put your stop is relevant. But isn't it interesting? The market broke out, but then pulled back. And then look where it hit, a level of resistance right there. And look, does it happen all the time? Of course it doesn't, but I think that's very, very significant. So if I didn't take the trade here, and I'm a person who, as we know, with breakouts, a high percentage aren't profitable, if I'm going to do the pullback approach, the advantage, of course, is your stop loss is often much closer, and so your risk-reward ratio is much bigger. And so that I wouldn't. But having said that, I wouldn't have taken the trade even with a pullback until about here because of that strong level of support. And of course, the Chicago has to come into free space.
Interesting. That's great. That's good. Do you have anything else for us?
No, I think that really sums it up, basically. So on a high level, the markets are still going gangbusters. That's what governments and central banks want, and that'll continue until it doesn't. And, there is a time when it will turn, but we just have to listen to the market. It'll tell us.
Darryl, I thought that was great. What did you think, Greg?
Best ever. Never seen a better presentation in my entire life.
Greg, you got my check. Thank you so much.
Yes.
All right.
And Darryl's my new best friend.
Always.
All right. Well, thank you for your time this morning. For you.
Thank you, Darryl.
And
Greg, thank you so much, Jeff.
Even though it's over, happy Valentine's Day.
Good. You enjoy the rest of the evening, and have something special with someone very special in your life.
And I appreciate all of you guys for coming and watching the video today on Valentine's Day. Happy Valentine's Day to you as well. And I hope you have a good evening. Thank you, Darryl. We'll see you at the next one.